Today on the show, I have the pleasure of speaking with Bronson Hill. Now, Bronson is the managing partner of Bronson Equity, and he is a general partner in over 1,500 multifamily units worth over $150 million across the United States. Bronson also co-leads a very, very successful multifamily meetup in Pasadena called Phoebe Pasadena Multifamily, which you can go to www.phoebepasadena.com. And I've had the pleasure of speaking at that event. It's a cracking event for anyone who's local here in Los Angeles. And Bronson is also the host of the Mailbox Money podcast, and he understands the investor mindset, having spoken to over 1,200 millionaires in the last couple of years, and he's raised over $20 million in the process. To top it all off, he's the author of The Single Best Investment Strategy During and After a Pandemic, and is a regular contributor to his YouTube and his blog. G'day, Bronson. Welcome to the show. How are you doing today, mate?
Hey, Reed. It's great connecting with you, man. I've just really enjoyed getting to know you over the years and seeing all the value you're adding through things like this podcast, as well as just what you do with your business and how you help people to become financially free and really get great returns outside of the stock market. So I can get around that 100%. So I'm really happy to be here today.
Thank you, man. And likewise, I've known of you for many, many years. I've had the pleasure of speaking at your Phoebe event in Pasadena. It's a great event, and putting in, again, the time and effort to put back to grassroots investing. I remember going to the first Phoebe event when I moved to Los Angeles back in 2014. I remember meeting your partner, Christina Studer, and walking up to her and introducing myself and being a complete newbie back in 2014. And I know I've dabbled a little bit in meetups, in downtown Los Angeles, and it's something, it's a thankless job, but keep it up, man, because that grassroots investor club mindset is really how I got my start when I first moved to the United States. And without those things, without those access to those clubs, it is people don't understand where to go, start looking and start getting involved in real estate. So kudos to you as well, man.
Thanks, man. It's an incredible resource that anybody who lives in like a mid-sized to major metro area. If they're not going to like live in-person meetups, you're really missing out, because there's no way to substitute. I'm sure you agree as well. Just being in the room with people that are a step or two ahead, or maybe you're ahead, and just we get so much value, Christina and I, just over doing that event, because it's not like there's a scarcity mindset of there's only so many deals, there's only so much money. Is we may do a deal together. The pie actually gets bigger as we collaborate and we help each other. So it really helps us a lot. We don't really make any money. We actually lose money on it, but we do it because we love it and we love adding value. And I've benefited. I have 15x my net worth just in the last 4 or 5 years from doing things like that. And it's just amazing when you bring value. You add value, you're looking to help others, they're looking to help you. It's just amazing how collaborative and how powerful that energy is.
Yeah, it's, we'll get into the show here in a minute, but I just want to quickly put a stamp on that, how important, again, coming from Australia, when I first moved to the United States, I remember the first, local real estate club I went to was the New York RIA, the Real Estate Investment Associations, which is across the United States. This is in 2012. And just the amount of awesome people in the room, and then the access to what you mentioned before, any sort of mid-sized to large-size MSA has one of these clubs. And, whether you're traveling across the US, you can probably look up on meetup.com and you can find one of these clubs and attend it, right? For relatively low cost. And automatically you're starting to surround yourself with local investors in that market. So if you are looking to invest, those people who are listening to the show and you're looking to invest out of state, get on a plane and go to one of the meetups in that local market, because you're going to be able to find a lot of great local people that can help you point yourself in the right direction and help you get started. So again, kudos to you, and keep up the good work, because I know how hard it is to run a meetup event. Any organization, in person, meeting monthly, meeting regularly, is tough, particularly in a pandemic. So keep it up, and I know that over many, many years it will come back in as you said, in tenfold or 15-fold, as you just mentioned before. So
for sure.
With that being said, let's get into the show. So the question I like to ask all my guests when they come on today on the show is, rewind the clock and tell me how you made your first ever dollar as a kid.
Yeah, so I think the first time I really started working, it was a little bit later. I got allowance when I was a kid, but when I was 14, I started doing paper routes. So we had paper delivery service for newspapers When I would do it after school in middle school. So I do it every day after school. My older brother had done it. I followed my older brother, Roman, in a lot of stuff. And I learned a lot from him. But basically, it was a great lesson in just responsibility that every single day, it'd be during the afternoons, after school, in the weekdays, and in the morning on Saturday, Sundays. I remember, literally in Seattle where I grew up, it'd be snowing, it'd be cold, I would have been up till 1 a.m. the next morning. I still had to get up at 6 a.m. to go deliver newspapers. And just that responsibility and the consistency it was required of the next couple of years really taught me a lot about just, what it takes to be successful. I really see that now. What I do now is just, if we're consistent, we show up every day. I mean, you and I know we don't really have anybody who's watching us what we're doing every day. But if we can just bring, who we are, we can bring value, we can show up, we can work hard, just amazing what we can accomplish.
Yeah, no, it 100% is. And having a paper out, having those things early on in life, really teaches you the value of $1, value of $1, and how you go stretch that. And I remember being a kid in my first job and owning $7 an hour at the local cafe, and 4 or 5 hours a weekend, and it was just enough to sort of put some money in your pocket, and again taught you the value of hard work. So what you just mentioned before, consistency. So walk us now through the story of Bronson and how you've come into the world of real estate. Everyone has a past story, everyone has a backstory. Did you come from the corporate world, and why did you, if you did, why did you leave it?
So I'll give the modified version, but it's some elements that I usually don't talk about. So when I was in high school, actually, I had this amazing kind of spiritual experience where I just, it was actually at a church, but I really felt like God, reached out to me and wanted, to plan for my life. And there was this real spiritual kind of awakening that happened in me. And so I really was into golf, and I actually wanted to be a pro golfer at the time. This is back at like age 17, 18. And then there was this door open to basically be a youth pastor at my church. So I basically decided to do that just at a young age, 18, 19. I got a chance to impact a lot of people. It was really fun. And I kind of have gone back and forth from like, I want to make an impact in the world to like, I really want to make a difference in business. And so I've had kind of this business and ministry kind of back and forth. So I had about 5 years I spent working at churches. I was a high school youth pastor with about 200 kids at a large church in Montana. I did some overseas work in Uganda, Africa. A lot of people don't know that. I've done that. And then for 10 years, after that kind of ended up, for 10 years, I did medical device sales, which people say, oh, it's such a big transition. But again, it was just a chance to serve people in another way and really help and add value and work hard and be consistent, all that stuff. And then about 4 years ago, I had been doing single family for a number of years, had a small single family portfolio, but my cousin, who's really into multifamily, was like, hey, why don't you do multifamily? And I said, well, I'd love to, but I don't have the money. And so he said, well, you can raise the money. So he said, go to this event, read this book, listen to this podcast. I did everything he said, started a meetup with Christina, or kind of co-led that meetup, found my first investor. And then I partnered with somebody who became a partner, and we raised $15 million over the next couple of years. So it kind of like, there's a lot of steps between that, but it's just amazing. I feel like now when it comes to mission, my mission really is obviously to help people become financially free investing outside of Wall Street. Because I think that Wall Street really is, set up to kind of cheat people over time. And I actually used to be an investment advisor for a few years, kind of in there. There was some of that, but, and also too, my big why is really to end human slavery in the world. And there's actually 20 to 40 million human slaves today, which is kind of hard to believe, but it just, in the world today, there are more human slaves than there actually been in the entire history of the world. And some of it's sexual human slavery, some of it's labor slavery, and there's all kinds of things. But just this insidious problem that to me is like a reason why I want to generate all this capital as wealth. And so we can create awareness and really help stop this.
Yeah, wow. It sounds like you've come from a very self-aware point in your life, being a pastor and being involved in a religious way in and around self-awakening and helping others. I think I could see you wanting to do and be more than just, being a real estate investor and having financial freedom for yourself, having that bigger North Star, which I think is very, very important to so many people when you get involved in real estate, because people sometimes just aimlessly say, I want to get involved in real estate, but they don't actually have a big why behind them or don't have a direction, at least in mind.
Yeah, there's that book by Simon Sinek, that famous book, if anyone has read it, it's called Start With Why. And it's just the idea of, start with why you're doing it. And it's I personally, my belief is, a yachts and Mai Tai lifestyle, well, that would be fun and great. And people that I know that have gotten that, they've kind of really felt a big sense of emptiness when they get there. So I do think a strong why, and it can just be like, hey, I want to spend more time with my family. I want to make an impact in my community. I want to give money away. I want to give time. I want to have, but when you become financially free, it allows you just to be able to say, what do I want to spend my time doing? Because really your time is the most valuable thing you have. You can make more money, but you can't make more time. And everybody's got the same amount, whether you're Elon Musk or Bezos or you or I or anybody, we all have the same amount of time. So how do we want to invest that in the people around us?
That's 100% correct. 100% correct. So talk to me about, and the impetus of this show is going to be around building your capital raising, prowess, coming from, medical sales. I've known you personally for a couple of years now. I've seen you grow in the space of raising capital, but just talk to us, how hard is it to get started raising dollars from other people when you don't have a lot of experience or you don't have a lot to offer, and because there's so many mental barriers along the way. And I'm sure we'll talk about the different platforms you've created, but I wanted to sort of start with rewind yourself back when you were raising capital for the first time.
Yeah, it's a really tricky thing to figure out in the beginning because, when I first started trying to do this, I was a full-time medical sales guy. All my friends and family knew me, that I was the guy who would go into surgery and help physicians with their heart surgical stuff. And it's kind of an odd ask, when you're like, hey, I'm raising money for a deal. It's almost like if you go to your car mechanic and he's like, hey, you have this problem with your car, but I'm raising money for this real estate deal. It just doesn't make sense. It's like, but this person doesn't really, the story doesn't quite make sense. So the biggest thing, like I started doing, and I think anybody who's starting this should do, is just to start telling your story, telling you, hey, this is what I'm working on. These are the things I'm learning. These are the things that are happening. I remember I had that first my first raise, I feel like I kind of got my teeth kicked in a little bit, where I was like, I'm going to raise all this money. It's going to be amazing. I've got friends and family and everything. Well, I had 62 conversations with friends and family. I went through the survey, of all the questions and their goals and things. And I had absolutely zero invests. I had no investors come from that. But my first investor came from a guy who was actually at my first meetup. We had 60 people there. I partnered with Christina, as you mentioned, that she had a successful meetup that was a general real estate meetup. And I said, hey, Christina, let's do it. I've known her for a number of years. She'd been a mentor and a friend. And I said, hey, what if we start another one just on multifamily? I said, I'll do all the work. You just show up. We'll kind of co-brand it. We'll have it be branded with Phoebe. And she's like, that sounds great. So showed up. I had a guy who I met at that meeting who said, hey, I'd invest in one of your deals. Never met this guy before. I'd invest in one of your deals. So I got coffee with him and he said, yeah. And I showed him a sample deal, just not a real deal, just a deal, what a deal would look like if I had one. And he said, yeah, I'd invest like 100,000 in that. And so I introduced him to another guy who was actually at that meeting, was raising money currently for a deal. So I basically brought those two people together. That's a great way to look at how, raising capital works, right? You're bringing a deal together with people that have money looking for a deal. But it really didn't take off for me until months later. I mean, I was continuing to grind, continuing to learn, continuing to analyze deals, going to events, trying to network, trying to all kinds of things. But when I found a partner that basically had a huge platform of really helping active syndicators. So if you and I are like, hey, if someone's listening, like, hey, I want to figure out how to do the deal myself. And he had a list of like 40,000 people on his list. And I basically approached him. I said, how's it going raising money? And I understood that they actually had a lot of trouble raising capital because they just weren't focused on it all. They were only focused on kind of selling their programs and kind of focused on kind of building that side. But I said, I know there's doctors and lawyers and business people and these kind of people that are never going to want to own a building and operate themselves, but they would love to passively invest. So we created a funnel. I started, while working my regular job, I started taking, 15 to 20 calls a week, sometimes at 6 a.m, sometimes at 2 or 3 p.m., 4 p.m., 7 p.m. Sometimes I'd just take a day off and I'd stack 20 calls back to back, where we'd have from 7 a.m. till 5 p.m. without a break. And it was exhausting, but I actually got equity in deals, which was really exciting. So anyway, I talk for a long time about all that, but I'm sure there's a lot of directions we can go with that.
No, this is great. I love when you just talk, because it's so funny. Verbatim, you described my first capital raise as well. I had 50 people on the list. I'm like, yeah, I'm definitely going to raise $500,000 here. Like, going to crack this out of the park. I'm working as a structural engineer in downtown Los Angeles. I think I had my own little meetup, and it was just like, it wasn't any sophisticated like yours. It was just like, hey, come to this bar on a Thursday and we'll do happy hour. It was nothing. Yeah. It was nothing crazy. And I remember just hearing crickets, absolute silence. When I pitched, and I think ultimately 2 or 3 people ended up investing. But then I remember reading a book called Key Person of Influence. They talk about the social pitch, the scheduled pitch, and then the sales pitch. And it was after that I read that book, and I remember looking back on it going, yeah, my social pitch and my social proof around raising capital was just zero, right? The people thought of me as the engineer. People thought of you as the medical sales guy. And it's just so hard not hard. It takes time to change people's perception of who you are, right? It takes a lot of conversations. So things like books, things like podcasts, things like newsletters, things like getting on the phone and just having chats with people start slowly changing people's mindset. I think there's a stat out there. You've got to tell someone like 10 times before they change their perception, or before it sinks in of what you're telling them, regardless of what it is. So if you're telling someone, I'm a real estate investor, I'm a real estate investor, I'm a real estate investor, I'm a real estate, like it takes that many times to, he's a real estate investor. Got it.
No, actually, in your experience too, I mean, I think Hunter Thompson, who's raised like $30 or $50 million now, he said the same thing, crickets. He had this big dinner, he's going to have all this money and nobody invested. And so that's kind of like a prerequisite. So I think if you're going to get to success, you have to be willing to become uncomfortable. And I realized, like, I think through that is like this information and this learning and this process is so valuable. And now I see it where I've 10x, 15x my net worth. And I know you've seen it as well. But it's the process of telling your story. One way that I've actually been able to tell my story is, and I think this is kind of step one for a lot of people, is just started like a active campaign or MailChimp. These are email marketing programs where you once a week or once a month, you just post information about what you're doing. And you don't include anybody who would threaten your job or anything. You just put it like friends or family or people related to you. And it just starts some of those conversations. And then you get used to, maybe sharing a video or doing a blog or just writing, I went to this conference. Here's what I like about multifamily. And just, you start doing that stuff. And it's just, if you can do it consistently, maybe it's every week or every month you're putting a newsletter out, or you're talking to friends or family, or going to meetups, and you're just continuing to put stuff out there. And I do think the content production process, and I'm sure you could probably speak to this as well, it's really led to a lot of my success as I've continued to build a platform. I've continued to build, blogs and emails. We do 10 videos a month now that we're putting out on YouTube and different places. And it's just amazing how that stuff, like, people share it and they watch it and they talk about it, and then you interview people, and it's just like your podcast. I'm sure people, like, they hear about it and they get introduced. Like, I'll get introduced to some of your people, and then when I've had you on mine, or if I don't think I've had you on, I need to have you on mine, and so they'll get introduced to my people. And it's just amazing how when you get known, you get out there, and people get to know you as, oh, you're this guy who does real estate, and then it just, like, everything starts to change. But it takes a lot. It takes longer than I think it should. But also, people want to see that you're consistent. They want to see that you're serious. They want to see that you're not the first. It's not the first deal you've done, and then it gets much easier after that.
No, you're exactly correct. And around the story is so important. Creating the story, and I remember when I first created the podcast back in 2014. Like, I've been going 6-7 years now. Like, it's crazy. It's over 300 episodes. That helped create the book. It helped create my second book. It helped create other things around it. And I remember back in the day, talking about writing a blog. I'm like, I'm so bad at writing a blog. I hate writing the blog. Like, I freaking hate it. And so choosing a medium that you really like, and I happen to really, really like audio and just chatting with people, right? And hearing other people's stories, because that's what this podcast has morphed into, is a platform for other people to come on and share their vulnerabilities around building success in real estate. So, but when I got started, I remember thinking, again, crickets, but you got to be consistent at it. And now through production of content, you can create other content, i.e. books and audio books and YouTube clips and all this other stuff. And I've got a team that does it, a lot of it, but I'm sort of trying. I remember in the beginning, like, I still remember the first time editing one of my first ever podcasts, and my wife's like, "What are you doing?" Like, you go to Upwork and find someone to edit the podcast for you. And it was just like, yeah, I don't need to be doing this at all.
Yeah. No, on that point, it's so true. Because I remember when I first started doing this, I remember just feeling like, I'm not a tech guy. Like, I've just never been a tech. Like, this is so overwhelming. Like, how in the world can I do all this stuff? Whenever some people look at me now, like, how in the world are you doing all this? Well, Gary Vaynerchuk, he says you should repurpose your content at least 5 different times. So I started doing this now. I realized, like, I watched somebody else do this, and I realized you could do it to where you learn kind of the processes. And if you can learn it, then you can teach it, right? You can hire a VA, you can do things like little videos that can kind of show screen share. This is what, and you can teach it one time and now somebody else has it. But like when I create 4 videos a month of me doing kind of whiteboard explainer videos, that's for YouTube. And then from there, I have it transcripted. My virtual assistant who's full-time with me in the Philippines will transcript that whole thing. Then we'll send it to a US-based writer that will take that and turn it into a pretty nice blog. So I pay $30 an hour for the writer to basically, a couple hours to convert that into a blog. And then that gets sent out every week via email. So again, there's a weekly blog with a video that comes out every single week. So I batch those videos, I record them, I kind of record them all together and stuff. But and then I basically send, some of that gets repurposed where we pull little clips out of it for the video. Obviously it can go as a blog on YouTube, on LinkedIn and other places. So it's just amazing that you don't have to be creating so many different things. This stuff can be repurposed, and there are team members that you can hire, and they're actually not that expensive. It's just, you got to be willing to do a little bit of work to figure out how to set it up. But once it's set up, as you know, it kind of runs, and then you just kind of keep adding new elements to it. And so you start with one thing. So if it's your blog, you start with a blog, then you can add in a video, or then you can add a podcast. And it doesn't actually take that much more time, but it takes time to first start it.
I 100% agree with that. And it's, I'll have to get your recommendation of the content writer for that $30 an hour, because I have very similar steps in my funnel, in the process. But stuff like creating an online funnel, I don't want to freaking figure that out. Like, there's a whole business in just creating funnels. It's like, no, I need to hire someone to go, I know I need to do it, but I don't necessarily need to be the person actually doing the work. So I'm very similar to, I think it's probably cut from the same cloth in terms of that. But in terms of just sort of rounding that conversation out around capital raising and the consistency piece, what's the sort of goal now for you in terms of producing content? Because it clearly seems like that is your key to raising more money, is to be consistent, 4 videos a month, repurposing all the blogs and the contents. Where do you want it to go? Do you have a goal in mind of you want to raise $100 million, or like what's the ultimate capital raising strategy and goal for Bronson Equity?
Well, I really think for me, this is going to sound a little bit detached from what you just said, but I think it's just starting with the why. So it's thinking more about what sort of impact do I want to make? And I think it's just that there are so many people out there that are just buying stocks and bonds. They're buying traditional assets. I mean, having all these calls of millionaires realize, they have a few problems. They're very busy. They typically pay way too much in taxes, and they don't really know how to invest. And so, if I can help solve a problem there, it'd be really great. My opinion is that 98% of people that should be investing in your deals, Reed, or in my deals, they've never even heard of syndication. They don't know anybody that does it. It feels weird. It's out of place. So I think there's got to be a way that we can, as a whole, syndicators, we can tap the mainstream. And we're competing with Wall Street. And the reason why Wall Street wins is they spend billions and billions of dollars in advertising, and they have lobbyists, and there's different things there. But I think that when you have a grassroots message that's saying, hey, we can get better returns than Wall Street without the volatility and incredible tax benefits. And, it's just amazing to me, having been an investment advisor, the wool that's been pulled over our eyes as consumers, that we think that traditional investments are stocks and bonds. I have a feeling over the next 5-10 years, stocks and bonds could get absolutely destroyed. I mean, there was a time when stocks, in 1929, when they crashed, and everybody was investing in stocks, where they crashed, and it took 25 years for it to get back just to the point where it was. And that even includes inflation. It wasn't even taking account inflation. Probably would be even higher, without that. But so anyway, I guess the whole thing is just to say, what's the mission there? So, there's dollar amounts, there's more amounts I want to raise and things like that. But I think it's just, writing more resources, more guides, more books, more events, more stuff that will really be helpful to people, that they can get a hold of a system, they can get a hold of something that really helps them get from, I've never really heard of this thing, or maybe I've heard of it, but I don't know, it just sounds weird, to okay, I actually feel comfortable wiring $100K to somebody I've never met and doing a deal. And maybe, somebody with a $5 million net worth can say, maybe it's possible I could leave my job in a few years by replacing my income, or at least my expenses, with passive investing. So to me, I think that's the biggest thing I'm really going for, is how do we tap into that blue ocean space of not just the real estate space, but the entrepreneur and the lifestyle space, right? So that's, I think, the biggest thing I'm working on right now.
No, I love that. And something about going back to the why and making sure you never forget what that why looks like, because that is so important to keep you in that consistency phase, to keep you going, to keep you getting up. And as you mentioned earlier, no one's looking over your shoulder to see if Bronson's doing any work. It's all self-motivation. So awesome stuff. In the green room, before we press record here, you talked about one thing you just mentioned there, inflation, right? And you have a bit of an opinion on where we are right now, given the environment. Let's dive into it in terms of how you've seen, and you've even written the book on how to invest in or after a pandemic. So let's open that can of worms up and let's start at the top of like how you've seen, in specifically the commercial multifamily real estate space, change in terms of valuations and how that's impacted. Inflation has impacted your portfolio, and what does that mean moving forward?
Well, there's a lot we could talk for hours about just what you just said right there, but I'll just kind of give a quick little overview. So again, a lot of us in the real estate world or the investing world just simply look at our own asset class. If you invest in stocks or bonds, you kind of just look at that. If you're a real estate investor, you kind of just look at real estate. But above real estate, you have really macroeconomics. You have really what's happening in the world. We have a situation right now that in the last 24 months, it's been somewhere between 30 and 40% of all the US currency in existence has been created either physically or digitally, which is just absolutely staggering if you think about. So there's a reason why real estate is going up. There's a reason why multifamily and all these things are going up. And we see that inflation, they're saying 8.5%. I personally believe it's somewhere between 15 and 20% if you actually count rents and you count other things in there. And if you think about that, just $100K sitting in the bank is losing $15,000 to $20,000 per year. That's just really, that's terrible. It's harsh. It's awful. But when we think about really what wealth is not holding dollars. It's not holding cash. It's not having, real estate or other things. It's basically having something that actually produces wealth. It's production, it's productive assets, or it's a store of value, right? So I actually really like physical metals. I invest in, gold and silver. I've just recently turned the corner. I'm a real asset guy, but I've just turned the corner to get into owning some Bitcoin off of an exchange. The reason why is looking at some of the Canadian trucker situation, that if you gave to support a cause you believe in, they could shut down your assets and say this money you think is your money is not actually your money. So I do think having something outside of the financial system is important. But when it comes to inflation, really the ideal way with the majority of someone's wealth to do is to go from cash to asset to cash flow. So meaning if I put 80% of my net worth or my wealth that I have to invest into an asset that pays me to hold it, and there's an inflation hedge there, it's amazing. And then the super bonus, like the super benefit of all of this, is with inflation. When we buy multifamily apartments, and you know this as well, basically, let's say we buy a $10 million building and we only rate, let's say we put 20 to 25% down and it goes up 20 to 25%. We've pretty much just doubled our equity in the deal because we're using leverage. So basically we're getting lower rates than inflation, substantially lower than inflation. We're able to use other people's money to do it. And so over time, that debt is going to be worth less, right? Because we're printing more and more money. So we pay it off with future dollars. And we know the property is going to be worth more. So it's kind of like a double positive. Your property is going to be worth more. I mean, there may be some short-term fluctuations, but long-term, it's going to be worth more. And the debt is going to be worth less. So that's just a little touch on inflation. But yeah, there's a lot to talk about there. And there's a lot of stuff that I kind of geek out on. Yeah,
look, I love it. And it's so true about the four sort of pillars of why you invest in multifamily. It's different. It's a physical asset. You have people paying off your amortization of the loans, which is paid from the rent. You have your cash flow. You have the appreciation. You also have the tax benefits, right? The depreciation, the accelerated depreciation. But talk to me a little bit about, like, you and I have both been in the game for long enough to know that cash flowing multifamily is becoming harder and harder to find, right? It's not as sexy as what it was back in 2014 or 15. So how are you having that conversation with people in and around the cash flow piece? And are you looking at certain markets across the United States in order to sort of keep sort of spouting off the cash flow, quadrant, so to speak, in terms of all the benefits of investing directly into multifamily?
Yeah, so it's interesting. I think it's interesting. You and I both live in California, and we don't really invest in California. I actually don't own anything in California. It's all Southeast. We've started doing a lot of work in the Jacksonville, Florida area. I love the market. I think I was mentioning that in our green room earlier, but just the idea, when you're buying in a place where population is growing, California has a net population loss. And when you count the birth rate, so even with the birth rate, we're still losing people. People are moving Texas, Florida, wherever else. But when you're moving to an area like, for example, I'll just kind of highlight why I like the Jacksonville area. I like it because the population is growing. There's many reasons for that. Somebody can retire from New York or Chicago. They can buy, instead of, an $800,000-$900,000 house, they can buy a decent house in a good neighborhood for $300,000. So it's cheaper for every retired person that moves there. They've got to have services, the people clean the house, the retail, the restaurants, the medical, all that stuff, the cars. So they've got to have support for all this. And so we're just seeing such population growth citywide. We've got like a 97% occupancy in the city, just of all units. So we had this deal we did in March that we bought for $27 million. It was a 288 unit apartment complex. We plan to hold it for 6 years and hopefully double the investor equity. We sold it for $37.5 million 10 months later. And that's not just like we're geniuses. Obviously we look like geniuses, sometimes we feel like geniuses, but it's not the case. It's right. It's just we're buying well. We're trying to buy well, but we still see so much upside. So we're seeing deals that we're looking at where some rents are just mom and pop ownership. We have some inside access to deals. We're seeing $900 to $1,000 a month in rent on average, where the average rent of our renovated units in that market are like $1,400 or $1,425. So we're just seeing incredible upside. So even if we're paying, what we're paying per unit is going up, but we're seeing the rents just going up substantially. And as you know, and for listeners, the value of multifamily is different than single family. It's typically based on how much income the property is producing. That's one way to value them. So when you see you're able to raise rents over the next couple of years, we can't really see, it's very hard to see a situation that we're not going to win in those deals unless the flow of just migration stops, which obviously everything's possible. But I think that being landlord friendly, being business friendly, having space, having weather, having all those things, we're pretty big on those markets. So, there are many other markets, but I think just really being aware of, what's really driving, population growth in these markets. And if you can get in front of that, I think is really, really powerful. I know that's true of the markets that you work in as well, in Arizona and in Texas as well.
It's interesting to see that type of these secondary, not even probably call Jacksonville a tertiary market. It's to some extent when you compare it to LA, New York. As an international person, I think of a primary market as I'm going to go there and have a holiday, right? New York, Los Angeles, San Francisco, some parts of Miami. Secondary markets might be, your Denvers and your Arizonas. And again, this is a Reed Goosens take on it, right? Sure. And then you've got, Jacksonville, Florida. Probably ain't on the list of where I'm going to go, holiday. It's a lovely place, but it's also affordable. It's that right size between affordability and growth. So do you think in these types of markets, you're going to start to have affordability issues as things ramp up so much? Tying back to your inflationary comment earlier, that I'm seeing it in my markets, that is just rents are going from that $900 where people are like, I'm going to move here and pay $900 for a 2-bedroom, and now they're $1,500. Like, how is that playing out in real time on the ground with renters, with that population growth? Because you get to $1,500, are you going to turn into another California or another place where it becomes really unaffordable to live?
It's a really good question. And it's surprising about a market like a Jacksonville, because it's actually the 14th largest city in the country. So a lot of people don't realize, so, you kind of put it together, like you said, maybe second tier kind of secondary market. But you're right. What's the point? You get to where it gets to be unaffordable, or do people start going further away to find places to live? But I think it's just, in areas people would like to be in Florida. There's a lot of reasons they would like to be there. We provide typically more workforce housing. So there's not going to be as many retirees or people working remotely that are living somewhere else, moving to Jacksonville. But there's a lot of redevelopment happening there, which we like. But, what's the point where things become unaffordable? And I think it's the stuff that, we're seeing. I'm actually big questions I'm having about single family right now in Los Angeles or other areas, that as 30-year mortgage, fixed rates, at least in December, were 2.9%. I think a week or two ago, they crossed 4.9%. So that's like a 74% increase in the single family mortgage rate. So, that also, it's a very dynamic market, right? Because you have an impact in that market where, things start to go down or affordability goes down. And then how does that drive rentals? Does that push people into rentals, or does it push people out of rentals and moving? So all this stuff is very dynamic, but I think that in general, Miami and Orlando and Tampa, some of these bigger markets are getting to be more unaffordable. But if you're like, hey, I'd still like to have a pretty good quality of life, there's, like I mentioned, a lot of redevelopment happening in some of these other areas like Jacksonville. It's some pretty good food places there. I have a good friend who's a chef who's like, yeah, there's actually some better food options that even in like parts of Miami and other things, which has a pretty good food scene. So it's something. It's a really good question. I think some of it we really can't tell exactly, but I think if as long as the kind of migration continues, and I think a lot of what's driving that is policy, is like when they're making it easy for businesses. I mean, you saw this with Elon Musk, who was basically being recruited by the governor of Texas. Hey, what do you want? Do you want less taxes? Do you want land? What do you want? And just finding a way to pull them out. And I think that's that type of thing is going to continue to happen. So I think for that reason, that market, and even the markets you're buying in Texas and Arizona, they're desirable areas because it's to me it just feels more common sense than what we do here in California.
Well, I will say that, and the contrary to that, like I've been investing in Austin for many years now, and Austin is becoming unaffordable. It's becoming California, right? And it is probably the shining light of a transition of a secondary market transitioning to primary market, but then also having all the issues that a primary market has: real big population growth, right? Then infrastructure can't keep up with. Then you're having affordability. The homeless population in Austin was nuts throughout the pandemic. And you start to then be like, oh crap, now we want everyone to come, but now everything becomes unaffordable now. So there is that the fine balance, right, of this move. And it's going to be interesting as over the next 5 years, how these markets transition and how they cope with that transition. Because what we're seeing, at least on the buy side in multifamily, I'm buying sub 4 caps in Arizona and Texas. I could buy a 4.5 cap here in California. So yes, my price per pound is probably cheaper in those secondary markets, but cap rate to cap rate, you're like, well, hang on, what makes now all of a sudden the Inland Empire looks really, really attractive?
Yeah.
So it's part of the reason I went to buy in Texas back in the day is because I was buying at 70, 80K a door. Well, now I'm buying at 200K a door. That's incredible. Like, it's insane. Like, I'm a deal in Phoenix, I'm looking to buy 230 a door, where 12 months ago, that same deal was 150K a door. Yeah. So it's going to be very interesting to see as we turn this corner. I'm saying a lot of things here, but areas transitioning, the valuations growing. Guess what's also growing? The valuation here in California in terms of price per pound. And how does it become as sexy to buy in these markets? What's the new low price per pound when we've got so much experience buying at such even drastically lower prices back in the day, and how that transitions and affordability and all the rest of it?
I have one thought on that real quick. And it kind of goes back to, we're talking about the global kind of macroeconomics, right? We have all this new money in the system. So it's not like, oh, things are just really high and they're going to go back low again. I personally think that there may be a stabilization, but I think we're at kind of the new normal where, again, there's no mechanism the federal government has once you've released all this money out there to like put it back in. Like, it's just out there. So if you look kind of over time, rents and inflation, there's a trend line. I mean, it's almost lockstep what inflation is and what rents are. Rents are a little lagging. So there's typically a little lag on that. Usually it's like a 12-month lag or so, but in general, they keep pace with inflation. So I personally think that, like, let's say somebody doesn't want to live in Jacksonville, it's $1,500 a month. Well, where are you going to go? Are you going to go to, Buckwheat, Iowa? Or are you going to where, I guess you go somewhere that you go to another country. What are you going to do? So I think, again, we think of dollars as being wealth when it's like, the dollars, dollars are not money, they're currency. And there's a difference, right? Like, dollars are just simply things, they're just pieces of paper, but real assets are things that we have. So I think that, I think in general, like, we're going to look at stuff and look back in 5-10 years and be like, man, we only paid $200,000 a door for this stuff, whatever. And now we're paying it's not like a high and low kind of thing, because what's happened is just incredible irresponsibility, in my opinion, on the part of the government, just to release all of this money and just continue to, they actually asked Biden, they said, I don't want to be political, but they said, what's your answer to inflation? And he started to say, well, if they just pass my Build Back Better $2 trillion spending. And it's like, you don't understand, like, if you're handing out money to people, in the short term, that helps, right? Because you have more money to pay your bills. But in the long run, it actually hurts the people that's trying to help. The people that don't have assets get really hurt. And that's what's unfortunate. The idea of we're serving the people that are renting these buildings, they are the ones that kind of get destroyed through inflation, which is really unfortunate.
Yeah, no, and I will, the counter argument to that is, and knowing that 2008 was a US problem, right? The response in the time of the pandemic is monetary stimulation, right? And everyone across the globe needed that. So what's interesting today is yes, I agree with some points you're saying in there, but you couldn't also be seen doing nothing in the pandemic. No one could around the world. No government could be like, hey, guess what? You got to stay in the freaking house, and good luck if you can't afford it, right? They've got to be seen to be doing something, right? Which has, there's always, you shouldn't have done that, but now we're in this problem of inflation. Well, right. The only silver lining to all of that is that every single economy around the world had to do the same thing, and that was release money, right? Stimulus. And that is now in the problem of inflation. So we're all at the same starting block. Where 2008 was an American problem trickled around the world, today's problem, we're all at the same starting block. Everyone had to do the same thing to get through the current freaking situation of COVID. Now it's like, okay, how do we turn up the interest rates, and who's playing chicken? Like, you go first, Japan, no, you go first, United States, and you go first, Europe, and how they're going to try and bring back inflation, which will ultimately, over history, we've never seen any government land that plane well. And right. So I think a lot of people are saying, well, hurry up and get on with it. If we're going to have a recession, let's do it. Let's get back to it. But I do agree with what you're saying earlier about there's money in the system. Again, not just the US system, across the globe, because every single country had to be seen to be doing something with their citizens because there's a global pandemic, right? And we haven't seen this in 100 years. So it's a worldwide problem, which is, I think, sets the playing field a little easier rather than back in 2008 looking at the lessons learned. But I do think you're right. It is now the new floor. It's not the new ceiling, right? I don't think we're going to see 80K a door again, unless I don't even know, unless legal immigration comes back and there's a lot, but even then, your cost of production, that's going to have another massive issue because you're going to have to build more. Well, hang on, the supply chain screwed. I can't get all the stuff here. So that's going to cost. So it's very complex, but I kind of agree with you. I don't see us slipping backwards to where we were in 2015 when I first got started and I bought my first property for $65,000, $70,000 a door. So just had to bring that around to as the international in the room, to be like, hey guys, we've got to take a step back and look at everyone's in the same freaking boat, right? We're all trying to get the water out of the boat in a sinking ship. And so anyway, I'll shut up. But any comments on that before we wrap up?
Yeah. No, I think it's, and I think, it's this interesting, nobody knows what's going to happen. Nobody knows the next 5, 10, we don't have a way out. This is what this is going to look like. And I do think there is a risk of some short-term deflation that all of a sudden they raise rates and all of a sudden, housing goes down in general across the board, single family, multifamily, cap rates go up. My hope is that, I say my hope, but I think what will happen is that rents will continue to rise because there'll be kind of a stagflationary type of thing where, things get worse while inflation's high, which causes rents to be high. So it kind of stabilizes. So that's, I think but I just think we're so short of, we're short somewhere between 6 and 8 million housing units in the US. And so we need all the apartments we can get. So what we do, I don't know if you're probably not doing as much workforce housing. We're doing more kind of the C+, B- kind of stuff, but we need as much as we can get. So I think, we know there's going to be demand and it's a great place to be.
Yep. No, I have a whole thesis on 70s and 60s product. Everyone doesn't want to touch it with the 10-foot pole. And I'm like, hey, it ain't going anywhere. People still need that. So that's for a whole nother topic, my friend. But look, at the end of the show, we love to dive into the top 5 investing tips. Ready to get into it?
Let's do it.
Mate, what's the daily habit you practice to keep on track towards your goals?
The best thing that I do daily, I go to a goals event every year and I actually read my goals every morning. So I have 10 goals. I read my personal mission statement. And I have some affirmations that I do, but just that routine that takes 5 minutes, I've watched myself meet and exceed my goals every year, and almost every year, not every year, but almost every area.
Wow. And that goes back to your consistency, man. Like that's freaking awesome, because I think I'm a quarterly type of guy. I've got it on my board here, but I don't, that's awesome. So consistently reading goals every day. That's fantastic. Question number 2 is, who's been the most influential person in your career to date?
I would say my cousin. He doesn't like getting a lot of props. I won't name by name, but he's a awesome guy. And he actually just got me this, which is a little bobblehead here. I just got this last night, but it was like, I sent him one, but it's like this little, if you look at does it look like me, Reed? What do you think?
The smile is a little bit off, right? A little bit off, but yeah.
Or maybe in 10 years I'll look like, anyway. So, but anyway, he's been super, super high net worth, super, experienced, and just having mentors like I called, hey, I'm thinking about this deal. What do you think about this? It's been really valuable.
Got it. Awesome. Question number 3 is, what the most influential tool in your business? And when I say tool, it could be a physical tool like a journal or a phone, or it could be a piece of software that you just can't run the business without. What is it?
Yeah. So for me, Active Campaign. I don't know if you use Active Campaign, but one of these email marketing programs, it just does everything. I mean, it automates every one of my systems, every one of my events. It does everything. I mean, it takes a while to learn it, but once you learn it, it's so valuable.
I use ConvertKit, but same type of thing. So awesome stuff. Question number 4 is, in one sentence, what's been the biggest failure in your career, and what did you learn from that failure?
Biggest failure. I would say probably not getting started sooner in this. I think everybody who is in multifamily says, "Man, I wish I started sooner," but you have to be kind to yourself and say, when the student is ready, the teacher appears. But I wish I'd started sooner. But part of me turning 40 was like, I'm just going to go for it. Life's too short, not to go after my dreams. And there's a quote that says, at the end of your life, you will regret more of the things that you didn't do rather than the things that you did. And so I was like, I don't want to live with any regrets. So I'm just going to go for it. But I wish I'd started sooner.
That's look great for 40, by the way. So well done.
Thanks, man. Thank you. Yeah. Can't say I have less hair than I did when I was 30.
Last question is, where can people reach you to continue the conversation? They want to be in your sphere. Where do they go?
Yeah. So I love connecting with investors passively or actively. You mentioned this guy, the single best investing strategy during or after pandemics, 24 color pages. You can find it on my website at bronsonequity.com. And we also have our investor club. We're doing deals. So love connecting with investors on that. But this has been great, Reed. Love all the value you're bringing. Just a great in-depth interview, and just appreciate, all you're providing your audience here.
Awesome, man. Well, look, I want to thank you so much for jumping on the show today. I just want to reflect some of the things that I took away from today's show. I think, the biggest thing, the underlying thing is consistency, like how consistent you've been over the years through everything you're doing, just the little things like the goal setting, but even back towards, learning it from having a paper out when you're a kid, so help being consistent in your life. And then that sort of transitioned into your capital raising. So funny that you and I had literally the same story.
I think it's a prerequisite. You have to have that happen, right?
You get a couple of investors on the email list, and I think the big thing is you don't realize how much you have to do in the content creation world to be consistent, to buy the top 2 inches. And so you think there's a quote from a guy who wrote a really great book called Keep Her Some Influence. He's been on the show, Dan Priestley. He says, you're less known than what you think you are, right? Mm-hmm.
Totally.
And you think that you're doing all this work and you think you're well known, but really you're not, because, you look at the Gary V's of the world and all that sort of stuff. And I love how you're repurposing all your content into stuff that is being valuable for so many people, and really creating a library and a long-term approach to your content creation. And then on the inflationary side, loved everything you had to say about that. And I do definitely think we're at the new floor. How's that going to look in the next 10 to 15 years? And as you said, is 200K a door the new 80K a door? I don't know. We'll wait to see. As long as rents keep going up and you can continue to add value. So did I leave anything out?
No, that's great, man. I just really enjoyed this conversation. Hopefully people found some value in it. And, it all sounds, to me, when I hear it, it all kind of sounds crazy. You raised this amount of money and you've done all this, but it's only just you're one step away. So anybody listening, mm-hmm. You're just one simple action step a day away from getting there.
Love it. Love it, my friend. Look, I want to thank you again for taking some time out of your day. Enjoy the rest of your week, and we'll catch up very, very soon.
Awesome. Thanks, Reed.
Well, there you have another cracking episode jam-packed with some incredible advice from Bronson. Remember, if you do want to get into his sphere, go over to bronsonequity.com. He's got a great downloadable piece of advice about how to invest during and after a pandemic. If you do like this show, the easiest way to give back is to give it a 5-star review on iTunes. And remember, all the links from today's show will be up on my website at reedgoosens.com. Again, thank you so much for taking some time out of your day to continue to grow your financial IQ. We're going to do it all again next week. So remember, be bold, be brave, and go give life a crack.